Assalamualaikum warahmatullahi ta'ala wabarakatuh, and hello to all of you. In this video, I'm going to clarify a few things in a proper way so that possibly you can use this information together when you are preparing the project paper. In this video, I'm going to talk about a few things which includes retirement planning, tax planning, as well as the ratio. Okay, the first part, I would like to repeat whatever that I have said before. Yes, in the video on retirement planning, you see that I give you an example where the students take the first year retirement income based on the salary only. But now I say to you that you can also add bonus if you want. Okay, let's say as in this example, let's say the client want to have 70% out of salary only. For the purpose of project paper, you can include bonus or exclude bonus because the amount that you want to include is actually based on the amount that you agreed between you and your client. Okay, so if your client decide that you want to have 70% out of salary, you can use this method. Or if you want to add salary because salary and bonus because your client agreed to have this value, then it's also you can do that, and make sure that you put that in the assumption that the client agreed 70% blah 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 plus salary and bonus as a first retirement income. Means that you always state that is the value agreed by your client. Okay, because you have flexibility a little bit in the project paper due to different client might have different preference in their decision making. Okay, as I said before, if your client work in huge firms where the bonus is like 6 months, then the bonus will be very significant for your client. So it is possible that your client want to include bonus in the calculation. But if your client possibly work in a small company and the bonus is possibly very low, let's say around 200 per year, but actually he earn a salary of 15,000 per month, then bonus is not significant. So he might no need bonus to include in the calculation. So it's depend on your client. But in the exam, if the question mention about salary and bonus and ask you to calculate the first year retirement income, then you have to include both salary and bonus in your calculation. Alright, in the exam. Number 2, I would like to talk about the net cash flow in the fact finding sheet. It must not be negative. It must positive. Okay, it must positive, and I say it is within the range of 40 to 60. If you say that, Doctor, mine is like 65, acceptable. Okay, if you say that alamak dah become 69, okay lah, pejam mata, as long as nanti later on when you work on when you work on the personal ratio, it has no problem, then it's okay for you to stick with that amount. And if you don't want to change, it's also okay because it's not too high. Okay, but if you know like it becomes like somewhat 100,000 over, it is something I don't I'm not comfortable with. Okay, so I think that you already get this about this part. Okay, you can already understand about this part. It is safe to take within the range of this figure. Some students were asking me whether the total asset is okay. If it is 1 million, then I said that it is okay. I have seen the combined total asset of the previous student, they use like 1.7 million, and certain student they use 1.9 million, also have no problem to run the project paper. So if your combined total asset, husband and wife, is within this range, I've seen other young and some student they make it like 750,000 and it has no problem. Still they can work on the project paper. Alright, so this is in my personal view is acceptable amount. Okay, some student they have clients who has a stepson or stepdaughter. Okay, this at the end of the day we have different names. Let's say his name is Najib bin Karim, and then the name of the daughter is Kamila binti Sulaiman. So Sulaiman and Najib are both different father, so it makes me curious what happened to this client. And then the student explained that it is actually the client's stepdaughter. So please don't make things complicated. We don't like complicated stuff in the project paper, so make it straightforward, like they have just a daughter, so make sure that the name is Kamila binti Najib. Is okay, nothing worry about that. Okay, another things I would like to talk about is about tax planning. You should use, again I repeat, you should use separate assessment, so both husband and wife can get tax relief. Child relief is better to claim under spouse with higher income. So you choose, if husband or wife they have a higher income, then it should be used as a tax relief in the project paper. Okay, you should charge under husband if the husband income is higher than wife. Alright, so in the tax planning, you will have to calculate the original tax paid as well as the revised tax paid. Okay, and then, alright, this is something I didn't explain to you in tax planning before. Okay, so this is the statement on the tax planning, where you have the tax planning before and revised. Alright, and then this is a separate assessment. This is the example that I showed you before, and after that you come up with the next tax payable for, this is for husband original, this is for wife original. Okay, this is the revised one. Alright, so this figure, the original amount, okay, before and original for husband and original for wife, both of these will be the tax paid. Okay, will be the tax paid in the net cash flow. Alright, it will be cash outflow. Okay, and it also will be tax payable. Alright, if you look at the net worth statement, income tax payable under liabilities. Okay, income tax payable under liabilities in net worth statement. Okay, so this figure, tax paid, this figure will be located in two different places. Number one is, I'll show you, okay, here the net worth statement, you put here the income tax payable for both husband and wife, as well as in the tax paid, okay, in the income tax paid in the cash flow statement. Alright, so you can see here income tax paid as a variable outflows. So that is the figure. It is where you have to work like backward. Okay, mula-mula in the first place you prepare the net cash flow and personal net cash flow and what another one, net worth statement, and after that you prepare the tax planning, and in this tax planning you are going to calculate the original version, and that value of original version you have to include in the net worth statement as well as in the net cash flow. Okay, alright, so I repeat again, the original tax paid that you have calculated under separate assessment in tax planning, you are going to put that in tax paid value. Okay, income tax paid value in cash flow, as well as tax payable, income tax payable in the liability section in the net worth statement. Alright, then after that, for tax planning, obviously you have to calculate the revised version of the tax planning by including relief that the financial planner has suggested. Okay, so that's why this is where the SSPN will come. Okay, SSPN, private retirement scheme, insurance, okay, medical claim, this is something you will add more to the relief to improve, to make a tax saving for your client. Okay. Other than that, it's about education planning. This is also something new, because in the past the SSPN will always just offer two products, okay, two packages. Number one is saving, number two is saving plus insurance. But nowadays, you know, it's just recently, I think that possibly in 2019, end of 2019 or 2020, where they make all the packages having saving plus insurance. So now in SSPN, you don't have package for saving only. No, they all of the package have a saving and insurance. Therefore, my suggestion is that, because you're going to advise your client to use SSPN, therefore you need to advise your client to take a package with high saving and low insurance, because you want to make saving for the child education. Okay, for example, if you go to SSPN website, then you can see package Nilam. So package Nilam, it offers high saving and low insurance. Alright, so you can use that package, and if it is not enough, tak cukup for the purpose of accumulating fund, then you should cover with education insurance policy. So which means in education planning, it is possible for you to have two packages. Number one is SSPN, number two is education insurance policy. Okay, so you calculate using SSPN, you can get tax relief, and if you have education insurance policy, you can also get a tax relief for child education insurance policy. This is something you have to double check with your tax lecturer. Okay, and beside that, this is also have an implications towards your insurance, child insurance policy. We didn't actually recommend to buy child insurance policy, but because the child now has a, you know, like insurance package, once you take the SSPN, therefore in insurance policy recommendation, you should state that you don't need to take insurance policy for your child, because once you take SSPN, your child will automatically will be protected under the package that you have taken. Okay, so this is also a part of the suggestion and recommendation that you should put in the insurance planning. All right, so you have to be careful, as if that, for example, in this case we are talking about education, but it's also related to insurance. So you have to be careful and take note about this, where the recommendation is not just only in education, but also you need to put some information in the education insurance policy as well. All right, now I'm going to talk about financial ratio. I said to you that try your best to get your personal ratio as healthy as possible. Okay, I give you an example. What if your personal ratio is different than the benchmark ratio? Let's say the benchmark or either ratio for basic liquidity is 3 to 6 months, but your client's liquidity ratio is 8. Okay, so which means that it is more than 3 to 6 range. Liquidity ratio means how many months client can survive using the cash that they have in case the clients lost their job. So as in this case, if the liquidity is 8, it means that your client have too much cash, which means your recommendation is that you have to recommend your client to invest some of the money to the investment account, you know, for example, like invest in unit trust or fixed deposit, rather than to keep it in the cash and cash equivalents. All right, if for example the client ratio is lower, say below the benchmark, say for example 2.5, so your recommendation is that you have to give an advice to your client to top up to at least the minimum amount of 3 and to slowly move to the optimum level of 6. Okay, so if it is too high, for example, like the example I give you before, then recommendation is to advise your client to reduce it by investing the cash. If it is too low, then you give an advice to increase it a little bit. Okay, if your client ratio is too high, for example, let's say some students say that their ratio is 50.55 months for liquidity ratio. Come on, you have to make an adjustment. This is too high, you know. All right. And also, please refer to the document that I give you on personal financial ratio so that you can give an advice to your client. Okay, I give you I show you the example. All right, this is the document that I give you in the Google Classroom. You can have a look at this and you can see the interpretation. So once you see the interpretation, you can use this interpretation in your project paper. Okay, what does it mean, and what if it is high, what if it is low? Then you can reuse the word in the project, in this document, to your project paper, so that it makes your project paper look professional. Okay, so for you to understand, you have to refer back to the project paper that to the document that I've shown you in the Google Classroom. All right, that's all for this session. Thank you very much.